So right there, steel and copper being the only hope of average folks without jobs in Detroit. For investors and for countries, it seems like gold is their hope for staying afloat in these turbulent waters that is the recession. I want to bring Peter back into the conversation. I'm glad we got you back. Gold is something that you have really hit the nail on the head with, and we've seen it just continue to hit record highs. Do you think that it's really taken its place as a safe haven next to U.S. Treasuries?
Well, it is a safe haven. I mean, Treasuries are not. I think the people who are buying Treasuries think it's a safe haven. They're mistaken. And when they figure it out, they will go to gold. But people have to understand what it's a safe haven from. Because I keep hearing people on television saying, well, people aren't buying gold because of inflation, because there's no inflation. They're buying it as a safe haven. Gold is a safe haven from inflation. That's what you're getting safety from. It's an alternative to owning currencies like the dollar or the euro or the yen or any other currency where central banks are creating too many. So if central banks are going to debase their currency, if you want a store of value that will protect you from inflation, the safe haven is gold. Treasuries are not a safe haven at all. I mean, they are abundant. The Treasury is printing them like they're going out of style. That's a bubble. You know, people say there's a bubble in gold. I'll give you an interesting statistic. In mid-2008, before the financial crisis, gold was $1,000. That was the peak. And it fell about 30%. But it's now 80% higher than it was at its peak in 2008. Yet gold stocks are only 10% higher than they were back then. If this was a bubble or a mania, you would expect gold stocks to be outperforming the metal because that's where all the speculative money flows. But the fact that nobody has confidence in gold enough to buy these stocks shows that there's so much fear in the gold market. It's not greed. And that's the antithesis of a bubble.
So how high do you think gold prices should be?
I think they're going higher. And, you know, there's no, as I said, there's no floor to these fiat currencies if they keep printing them, particularly the dollar. So there's no ceiling to the price of gold. But really, you know, if you look at gold, gold is like a thermometer on the economy. It's like if a doctor takes your temperature and you got 105, he can't just send you on your way. I mean, obviously, there's something wrong with you or you wouldn't have 105 temperature. The gold going at $1,800 an ounce, going up every day, is saying that the economy is sick. It's really, really sick. Yet our leaders are ignoring gold and just keep on doing the same thing as if gold is telling them nothing.
I want to ask what you think, because you say U.S. bonds are not a safe haven and they're telling investors the wrong things right now. How do you explain then that yields on 10-year treasuries have collapsed to 70-year lows below 2%?
They've collapsed because people are buying them because they think they're a safe haven, but they're wrong. And, of course, central banks are buying them. But how's their safety? The 10-year treasury is yielding 2%. The government's own inflation numbers, we got CPI this week, they show year-over-year prices increased by 3.6%. So the yield on treasuries is negative. How do you get safety with a negative yield? In fact, the yield is pretty big because you have to pay taxes on that interest. And of course, the government is lying about inflation. Inflation is much worse than the 3.6% that the CPI shows. I think it's closer to 10%. And you know what's interesting is if people remember back to the 1970s, when Richard Nixon imposed wage and price controls, it was because inflation got to 4%. So we were so worried about inflation at 4% that we did something as crazy as wage and price controls. Now, that was the wrong thing to do, but that shows you how concerned we were about inflation of 4%. It's 3.6 the way the government reports it, yet we don't even care.
So then are you saying that the whole U.S. bond market is wrong, essentially, and you're right?
Absolutely, and that's not going to be the first time where almost everybody's been wrong and I've been right.
Wow, Peter Schiff versus the entire U.S. bond market. You heard it here.
Sure. The market got the technology stocks wrong. The NASDAQ was up at 5,000. The market was valuing internet stocks sky high, and then they found out they were wrong. Then the market made the same mistake with real estate and with mortgages, or with bonds securitized by mortgages. Markets often get it wrong in the short run. And they figure it out and get it right, and you get the bursting of the bubble. And I think people who are going to lose the most money are the people who are in bonds. People will lose more money in bonds than in stocks, by far.
So when does this collapse?
Well, if I knew that, I wouldn't be sharing it with anybody. I'd be on my yacht in the Caribbean, the place of my trades. I don't know exactly when it's going to happen, but I know it's going to happen. I got a pretty good track record at detecting bubbles. And it's interesting that the people that missed the stock market bubble and missed the real estate bubble think that they see a bubble in gold. That's the one place there isn't a bubble, because gold is reflecting the loss of purchasing power of fiat currencies. Gold is simply telling you how much money, how much value rather, dollars are losing, euros are losing, yen are losing, RMB is losing. So it's not a bubble because gold's not going up. It's paper currencies that are losing value. Gold is simply letting you know that that's occurring.
Do you think, you say that gold prices should show policy leaders that the economy is sick, but does all of the run into the bond markets, into U.S. Treasuries, along with gold, show that people want to have cash? Because at the end of the day, can you pay your bills with gold?
Well, sure. I mean, you can pay any bills. I mean, you know, maybe not everybody is smart enough to understand what gold's value is, but you know, most people would accept gold in exchange for goods. I mean, maybe you'd need silver, but if the person who has a good that you want doesn't want the gold, you can always sell the gold to somebody else and get the cash, because gold is money. I mean, it's recognized around the world. Everything else is just a poor substitute for money.
You and Ron Paul say that. Ben Bernanke, Federal Reserve Chairman, seems to disagree. They got into that fight. But I want to...
Bernanke never gets anything right, so I wouldn't be surprised that he's got that wrong.
Do you think, you know, I want to ask, because Venezuela's leader, Hugo Chavez, is taking his gold out of the U.S. and UK, or he wants to, and he wants to repatriate it. Do you think that's making people worried that there may not be enough physical gold?
Yeah, that might be the case. They might be worried that some of these depositories have leased that gold out and that maybe they don't actually have it, or they'll have difficulty getting it back because maybe the people they leased it to have sold it and maybe they don't have the ability to buy it back. There could be a lot of counterparty risk. So that's, you know, people just want to have the gold. I mean, that's what our clients, you know, our clients at Euro Pacific Precious Metals and Euro Pacific Capital, we sell physical gold. Most of our clients don't want to own the ETFs for that reason. They don't want any counterparty risk. They don't want any uncertainty. They want gold that they know that they own.
Which, for people that don't know, ETFs are paper gold, essentially, right?
Well, it's an exchange-traded fund. Your gold is sitting in a warehouse someplace, but the only thing you have is shares in the ETF. And the question is, what if that gold isn't there? What if there's some accounting error?
All right. We could have gone more with Peter, but I think that was a good note to end on. We heard a lot from him, including a bold prediction. He thinks that everyone has it wrong with U.S. Treasuries, so we'll have to wait and see if that explodes. That was Peter Schiff, president of Euro Pacific Capital.